Embarking on a property transaction within the European Union involves navigating a landscape of costs that extend beyond the purchase price. These costs, collectively termed property transfer costs, encompass a range of fees and taxes that vary significantly across member states. Understanding these costs is crucial for both buyers and sellers to make informed decisions and avoid unforeseen financial burdens. Property transfer costs typically include administrative fees, taxes, and broker commissions. Administrative fees are associated with the legal and administrative processes involved in transferring property ownership. These include notary fees for authenticating documents and property registration fees for publicly recording the transfer. Taxes, on the other hand, are levied by governments on property transactions and can vary widely in terms of rates and calculation methods. Broker commissions, also known as agency fees, are paid to real estate agents or brokers for their services in facilitating the transaction. These fees are typically calculated as a percentage of the property's sale price and can differ based on factors such as the agent's experience, the complexity of the transaction, and local market practices. Navigating this complex web of costs requires careful consideration and often necessitates seeking professional advice from legal and tax experts. By understanding the different components of property transfer costs, buyers and sellers can approach transactions with greater transparency and minimize the risk of unexpected financial surprises. Administrative costs represent a significant portion of property transfer costs in the EU. These costs can often be overlooked by potential buyers and sellers, but they play a crucial role in ensuring the legality and security of property transactions. These costs are associated with the legal and administrative procedures necessary to ensure a secure and legally binding transfer of property ownership. Without these procedures, the risk of fraud and legal disputes would be significantly higher. Two primary components of administrative costs are notary fees and property registration fees. Both of these fees are essential to the property transfer process and serve different but complementary purposes. Notary fees are paid to notaries, who are impartial legal professionals appointed by the state to oversee the legal aspects of property transactions. Their role is to ensure that all legal requirements are met and that the transaction is fair and transparent. Notaries play a crucial role in verifying the identities of the parties involved, ensuring the legality of the transaction, and drafting and authenticating the sale agreement. They act as a neutral third party to prevent any potential conflicts of interest. The fees charged by notaries are typically regulated by law and vary based on the value of the property and the complexity of the transaction. This regulation helps to maintain fairness and transparency in the property market. Property registration fees are paid to the relevant land registry or cadastre office to officially record the transfer of property ownership. This step is crucial for the legal recognition of the new owner. This registration process is essential for establishing legal ownership, protecting against fraud, and ensuring the accuracy of public records. It provides a public record of ownership that can be referenced in future transactions. Similar to notary fees, property registration fees are also generally determined by the property's value and the specific procedures involved. These fees can vary widely depending on the location and the specific requirements of the transaction. Understanding the breakdown of administrative costs, including notary fees and property registration fees, is crucial for both buyers and sellers to accurately estimate the overall expenses associated with a property transaction. This understanding can help prevent unexpected costs and ensure a smoother transaction process. These costs can vary significantly between EU member states, highlighting the importance of seeking local expertise to obtain precise information and avoid potential budget overruns. Consulting with local professionals can provide valuable insights and help navigate the complexities of property transactions in different regions. Real estate agents or brokers often play a pivotal role in facilitating property transactions within the European Union. They act as intermediaries, bridging the gap between buyers and sellers and ensuring that the process is as smooth and efficient as possible. They provide a range of services, including property valuations, marketing and advertising, identifying potential buyers or sellers, negotiating terms, and guiding clients through the legal and administrative processes. These services are crucial in helping clients navigate the often complex and nuanced real estate market. For their services, brokers typically charge a commission, commonly referred to as an agency fee. This fee is the primary way that real estate agents earn their income, and it compensates them for the time, effort, and expertise they bring to the transaction. Agency fees in the EU are not uniformly regulated and can vary significantly from one member state to another. This lack of standardization means that the cost of hiring a real estate agent can differ widely depending on the country in which the transaction takes place. The structure of these fees can also differ, with some countries employing a fixed fee model, while others utilize a percentage-based system. In a fixed fee model, the agent charges a set amount regardless of the property's sale price, providing predictability for clients. In the latter case, the commission is calculated as a percentage of the property's sale price, typically ranging from 1% to 5%, but potentially reaching higher levels in certain markets or for high-value properties. This percentage-based model aligns the agent's incentives with the sale price, potentially motivating them to secure a higher price for their property. Several factors can influence the variation in agency fees across the EU. These factors can include the overall health of the real estate market, economic conditions, and regional differences in property values. Market conditions, such as supply and demand dynamics, can impact the level of competition among brokers and, consequently, their fees. In highly competitive markets, agents may lower their fees to attract more clients, while in less competitive areas, fees might be higher due to limited options. Local customs and practices also play a role, with some countries having established norms for fee structures. These customs can be deeply ingrained and may influence both the expectations of clients and the standard practices of agents. Additionally, the complexity of the transaction, the type of property, and the specific services provided by the broker can all contribute to variations in agency fees. For instance, commercial properties or luxury homes may require more specialized knowledge and effort, leading to higher fees. Given the lack of harmonization in agency fee regulations across the EU, it is essential for both buyers and sellers to thoroughly research and compare fees charged by different brokers in their target market. This research can help clients find the best value for their money and avoid unexpected costs. Engaging in transparent discussions about fees and services up front can help manage expectations and ensure a smooth and satisfactory transaction. Clear communication between the agent and the client is key to building trust and achieving a successful outcome for all parties involved. Property transactions in the European Union are subject to various taxes that can significantly impact the overall cost for both buyers and sellers. These taxes are an essential consideration for anyone involved in the real estate market, whether they are purchasing their first home, investing in rental properties, or selling a long-held family estate. Two key taxes commonly levied on property transactions are property transfer taxes and capital gains taxes. Understanding these taxes is crucial for navigating the financial landscape of real estate in the EU. Property transfer taxes, also known as stamp duties or transaction taxes, are levied on the transfer of ownership of a property. These taxes are a one-time fee that must be paid when the property changes hands. These taxes are typically imposed on the buyer and are calculated based on a percentage of the property's sale price or its assessed value, whichever is higher. This means that the more expensive the property, the higher the transfer tax will be. The rates for property transfer taxes vary widely across EU member states, ranging from as low as 0.5% to as high as 10% or more in some cases. This variation can significantly affect the overall cost of purchasing property in different countries. Capital gains taxes, on the other hand, are levied on the profit realized from the sale of a property. This tax is an important consideration for sellers, as it can impact the net proceeds from the sale. This profit is calculated as the difference between the selling price and the original purchase price, adjusted for allowable deductions such as renovation costs and inflation. Properly accounting for these deductions can help reduce the taxable amount. Capital gains tax rates and exemptions vary significantly across EU countries, with some member states offering exemptions for primary residences or for properties held for a certain duration. These exemptions can provide substantial tax savings for qualifying sellers. Interplay between property transfer taxes and capital gains taxes can create complex tax implications for both buyers and sellers. Navigating these complexities requires a thorough understanding of the tax laws in each country. For instance, a high property transfer tax rate might deter investors, while generous capital gains tax exemptions could incentivize long-term property ownership. Investors must weigh these factors when making decisions about buying or selling property. Understanding the specific tax regulations in each EU member state is crucial for making informed decisions and optimizing tax liabilities. Consulting with tax professionals and conducting thorough research can help buyers and sellers navigate the complex landscape of European property taxes effectively.
Люди як не все ж ті, йому, не, з другої сторони.